Just heard from NVIDIA CEO Jensen Huang and Accenture CEO Julie Sweet about their expanded partnership to drive enterprise AI adoption. And joining us now to break it all down, Dan Ives of Wedbush, Patrick Moorhead of More Insights and Strategy. Pat, you're remote, so I want to get your take first here. It's hard to know. We've seen Accenture team up with Microsoft. They're a big go-to-market partner. How big a deal does this have the potential to be, you think, now?
So I think this is a really big deal because it hits it, John, what you and I have talked about before on the show is what are the downstream effects of AI that's being built in the infrastructure? And we talked about what has to connect is this connection to rise to get the ball rolling beyond infrastructure. So this is exactly the type of deal that's happening that could potentially do that to accelerate the enterprise. And this is a big deal, not just for Accenture and NVIDIA, but for the entire industry.
So I want to get your thoughts on this, Dan, especially because Jensen Huang literally said now is the beginning of this next wave, that he thinks this is going to be the biggest wave, this enterprise adoption. And then as that rolls out, you're starting to talk about industrial AI, which we mentioned it before the break. Honeywell CEO said to me yesterday, Vimal Kapoor said to me yesterday, it's the difference between predictive versus deterministic AI, two very different models, two very different outcomes.
$1 trillion of AI CapEx, we believe, in the next 3 years. And I think what Patrick talks about is a great point. We are just in the first inning of where AI is going. But partnerships like this, I think there's a watershed partnership. And I think what you heard from the godfather of AI, Jensen, what Julie talked about, this is now, it's the multiplier. For every dollar spent on an NVIDIA chip, we know there's an $8 to $10 multiplier across the rest of tech. Infrastructure services, you talk about industrial, sovereign AI. It is just the start. It continues to be our view. It's 9 p.m. in that AI party that goes to 4 a.m. And I think what we see here is just starting to play out.
So, Dan, you can kind of see what Jensen and NVIDIA are doing, this pace, yearly pace on the platforms and technology, these partnerships throughout different areas of the ecosystem that don't just involve, hey, here's some chips, but really building on top of our technology. Is it coming down to an eventual zero-sum situation where NVIDIA pulls away, and when they win big, everybody else, at least who competes with them on the chip side, thinking AMD and Intel, are at bigger risk of losing?
Yeah, no doubt. Lisa Su clearly watching this interview and everyone across the industry, because right now they're the only game in town. They're just going to continue to expand that moat. It's the Oracle model. It's the Microsoft model. And I think what they're trying to do is just gain more and more share when you talk about that revenue opportunity. And I think that's what Jensen's going after. I think the big question today is we talk about this $1 trillion of AI CapEx, fourth industrial revolution playing out. But it is going to be a Game of Thrones battle with other big tech players, because Microsoft, Google, Amazon, everything that you talk about in the show, this is now starting to get into that second, third, fourth derivative that I know, Patrick and myself, we talk about a lot.
One day after the stock found support at the 50-day moving average, NVIDIA saw a roughly 4% increase on Thursday morning. As news broke that the leading provider of AI chips had contributed $100 million to OpenAI, shares rose. The 50-day moving average of the stock is 5% above. After increasing 4.6% this week, shares are now 15% below their split-adjusted all-time high of 140.76. So should you invest in NVIDIA stock right now? Buying stocks at the right time will undoubtedly increase profits. It's difficult to determine whether to purchase or sell NVIDIA's stock at this time, despite the company being the clear market leader. Investors may determine if NVIDIA stock is a good investment at this time by examining technical indicators and chart indications. The consulting firm Bain predicted that the overall addressable market for artificial intelligence hardware and software will increase by 40% to 55% over the course of the next 3 years, which caused shares to rise on Wednesday of last week. Compared to 1.5 million H100 units in 2023, 3 million GB200 graphics processor units are anticipated to be in demand by 2026 from NVIDIA. Barron's reports that NVIDIA lost its position as the top-performing S&P 500 stock of the year last week. As of last Monday's closing price, Vistra had gained 190% year-to-date, while NVIDIA had gained 135%. However, NVIDIA's stock price increased on Monday on the announcement that the massive Chinese e-commerce company Alibaba will work with NVIDIA to advance autonomous driving technologies for Chinese electric vehicle manufacturers, some of which are Tesla's competitors. NVIDIA's drive technology for autonomous vehicles is now linked with Alibaba's large language model portfolio. The stock has a buy recommendation and a price target of 165, according to Melius Research analysts, as the company increases its manufacturing of Blackwell chips in the fourth quarter. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
NVIDIA and Accenture announcing a new partnership today, aiming to set the blueprint for how we begin integrating AI into the workplace. Our Deirdre Bosa has more in today's Tech Check. Deirdre, good morning.
Hey, Sarah. Good morning. This isn't the first of its kind, but it's clear that Jensen Huang has his eye on where the puck is going. Now, in partnering with Accenture to encourage the adoption of AI tools, he is making sure that the billions and billions of dollars the mega caps are spending will translate into hard revenue for their customers, ideally justifying a cycle of spending from the hyperscalers and earnings from those customers that keeps NVIDIA and generative AI, one and of the same thing, at the center of enterprise. Now, under the partnership, Accenture will train some 30,000 employees on NVIDIA's AI tools and create a new NVIDIA business unit. Those consultants will then go to Accenture's customers across retail, healthcare, manufacturing, financial services, et cetera, and will help them implement those tools and services into everyday operations. So instead of signing up for Copilot or Agentforce or hiring OpenAI to create custom GPTs, you get an army of consultants across the space backed by NVIDIA to bring them all together and speed up adoption in a more holistic way by creating agents, the new buzzword, and just as investors are increasingly looking for results. Now, Accenture and Google Cloud, by the way, they also have a partnership focused on AI adoption and cybersecurity. This push to move from AI proof of concept to production. It's also a good example of how generative AI can actually create new kinds of jobs. So far, we've seen generative AI replace lower level jobs, especially in tech and IT. But these 30,000 employees at Accenture, they're part of a team of more than 50,000 that are being retrained for an AI world. One of the startup darlings in this space, Scale AI, it has its own human army of more than 100,000 contractors that does something called data labeling AI, which essentially formats information for AI training. Something to keep in mind, though, there was a very similar partnership that NVIDIA announced with Infosys 1 year ago. That one was 50,000 employees to be trained on AI solutions. Now, even the wording of this partnership was nearly identical. It aimed to, quote, help enterprises worldwide drive productivity gains with Gen AI. 1 year on, investors are still looking for those gains, so it's an open question. Can Accenture do a better job of this?
Billionaire Ken Fisher frequently imparts his investment knowledge, including lessons learned over the years and insights into the market. In response to the Fed's rate drop, Fisher recently counseled investors to concentrate on long-term investing rather than what the central bank is doing. NVIDIA's losses following its most recent quarterly earnings were mostly anticipated given management-confirmed allegations of Blackwell delays. However, a modification to the Blackwell GPU mask was the primary cause of the delays. Analysts say that doesn't change the chip's primary functioning logic or design. Although Blackwell has been postponed for a few months, this does not alter NVIDIA's fundamental growth premise. As a result of the data center expansion and the AI wave, NVIDIA is expected to experience significant growth. During NVIDIA's GPU Technology Conference in March 2024, Jensen Huang, the CEO, projected that data center infrastructure spending will reach approximately $250 billion annually. Depending on how long this level of investment continues, this might come to a total of $1 trillion or $2 trillion over the following 10 years. Vivek Arya of Bank of America confirmed this estimate during the same Q&A session. estimating that the overall addressable market will be between $1 and $2 trillion, especially as more nations invest in their own AI infrastructure. Spending may reach the upper end of that range by the end of the decade. Naturally, NVIDIA won't control the whole $2 trillion market, as it will have to contend with rivals like AMD and in-house AI accelerators made by Google, Amazon, and even Apple. According to some forecasts, NVIDIA will lead the data center industry with a market share of over $950 billion between 2025 and 2029, less than half of the overall market. So what does this really mean for NVIDIA's stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
And Patrick, I'm just going to stick with this discussion that we're having, what this means for the competitive moat for NVIDIA, but also what it means for how, as it builds out this platform, as it now reaches across what he used, connecting fabric was the term he used, with his partnership with Accenture, what this means in terms of making NVIDIA a newer, bigger, more formidable competitor with not just other chip players.
So this 100% increases the moat. More deals like this. And remember, the company cut deals like this with IBM Consulting 6 months ago. So they're going down the line with the major GSIs. And Jensen said it perfectly. We just don't do chips. We do chips. We do comms chips, CPUs. We do racks. We do networking. We do entire data centers, and then put the software on top of that. And then you layer in these types of embeddings, as I will call this. What may have or may not have come across in this deal is that NVIDIA software is going to be integral inside of these solutions from Accenture. And what that does is that builds in a lock-in, that builds a moat. And yes, further down the line, competitors will come in to be able to do that, but it takes time. And people are very happy with the investment that NVIDIA is making into this. And nobody wants to get left behind. Just like we saw FOMO in the data center build out, nobody wants to get left behind with the global systems integrators and everything in between. One of the big issues that hasn't been discussed yet is just I'll call it the pitiful use in the enterprise of AI, right? And I think we're 18 to 24 months current course and speed to start seeing that hockey stick. And this is a deal that could potentially make that happen. Maybe it shaves off time. I'm optimistic about this deal that it will.
The promise of artificial intelligence, AI, technology to transform everything from our everyday lives to the way businesses are managed, has caused investors to flock to AI stocks in recent times. And this high-growth tale is only getting started. By the end of the decade, the $200 billion market as it exists today is expected to grow to over $1 trillion. All of this has resulted in double-digit gains for numerous businesses this year that either help create AI or are actively creating it. At the top of the pack is NVIDIA. The leader in AI chips globally has witnessed a roughly 135% increase in stock price so far this year. It should come as no surprise that investors and shareholders of NVIDIA actively monitor the company's actions for hints about future plans and utilize this information to guide their investment decisions. They might now be watching NVIDIA's AI Summit, which kicks off on October 7, as a possible trigger. Is it wise to purchase NVIDIA stock ahead of time? Let's investigate. A few facts regarding the summit beforehand. From October 7 through October 9, it will take place virtually and on location in Washington, D.C. As of this writing, there are still a few limited quantities of exhibit-only permits available, but it appears that the public conference passes have sold out, suggesting that this is a popular event. I wouldn't anticipate announcements of new services or products, nor updates on NVIDIA's most recent offerings at the summit. Instead, this event is aimed to highlight just how the company's technology, and AI in general, is transforming various industries. The chief executive officer of the weather company, Sherry Bockstein, and Vice President of Enterprise Platforms at NVIDIA, Bob Pett, will be among the presenters discussing the most recent advancements in AI. All of this is extremely positive for NVIDIA, since it demonstrates that AI isn't just a science fiction. Rather, it's a technology that is being used and producing significant outcomes in a variety of industries today. This is good news for NVIDIA's shareholders and prospective shareholders, since it should result in continuous revenue for the company as it provides the services and tools required to maintain this advancement.